for the time being, we need to get to a conversation with the Zen Tech management. Mr. Ashok Atluri, the chairman and MD of Zen Technologies, joins us on the show. Hi, Mr. Atluri. Well, the markets didn't like the numbers, and that's why the stock was down 20% yesterday. And from the peak, it has halved. But let's get a couple of questions out of the way. First up, in terms of the financials, earlier you were talking about around 900 crores of revenues with approximately 35% of margins and your receivable days coming down. Do you think that you're on track for all of this? And the working capital cycle is very, very important, sir, because, the cash from operations as well have been very, very bleak. So please confirm these details. Mr. Atluri, you're on mute, sir. Our viewers, your shareholders are waiting to hear you.
Yeah, 900 crore we are on track, Nigel. And with respect to the working capital days, we are thinking that it will stabilize around 200 days on overall year basis. So otherwise, everything is good. We think there is a slowing down in the orders received from the government, and we think the orders should pick up in the Q4 and Q1. So we are looking forward to that.
Okay, all right. So 900 crores of revenues, working capital days at around 200 days, and margins at around 35%. All three numbers just confirmed, right?
Yes.
All right, Mr. Atluri, before we get into further details, when a stock runs up big time, the street is very, very happy. But when it falls, they want to see the largest stakeholder come in there and give some support. Now, your shares, your holding in the company, from around, I think, 60% because of dilution, etc., it's come down. The last reported number, I think, is a little below 50%, at around 49%. With the kind of fall that you've seen in the stock price, and given that you believe that the company is still on that growth path, would you come in there and, try to support and maybe find the stock attractive enough and back up the stock, pick up some stake and increase it from around 49%, say, take it back to around 50%? Is that a thought process in your mind?
So there is no such thought process now, Nigel. The reason is that, we diluted, the dilution has been mostly done because of the QIP that we did. We did sell, we did sell 4% of our stake, on two occasions. But the dilution has mostly been because we raised the money for acquisitions and working capital needs. I don't think we will be entering the market to buy it. Because the intention was not to trade sell high and buy low. The intention was we wanted to have some money on the table. So that was the reason, yeah.
That brings us to our next question, which is the acquisitions that you have made or the acquisitions that you've announced along with your results itself. I look at some of the numbers. You've bought Applied Research for about 127 crores. Out there, the revenue is 92 crores. You've invested about 4 crores in Bhairav Robotics, no revenue. You've invested about 25 crores for 51% in Vector Technologies. Here as well, absolutely no revenue. Nearly 13,000 rupees is what you reported in the last financial year. So what one wants to understand is what is the scalability in terms of revenue for these acquisitions, and are they margin accretive? If not, then by when?
So ARI is in the business of naval simulation, and we are very. I think it's almost like a twin for Zen. Zen has been very dominant in the army simulation, and ARI has been dominant in the marine simulation, not in the naval simulation. Now, difference between marine and naval is that naval simulation also require weapon systems, etc., as an addition to make them transfer from marine to naval. And Zen has those weapon systems, simulators with them, or they can be achieved very easily. So this will be a completely new market that we will be addressing in a big way. Actually, about 15-20% is already from Navy for ARI. But this is an extraordinarily, opportune moment for us to invest in this company. And we have been saying that we want to get into Navy. And this
Could you give us a sense of how much bigger can it be? It's 92 crore as of the last financial year. You've paid 127 crore for this business. How much bigger can this be over the next 1-2 years? What margins are you targeting here? And on the others as well, Vector and Bhairav, when do they become revenue accretive? Because you've paid a fair amount for them, together close to around 30 crores.
So with respect to by 27, I think it should at least double. The revenue should at least double for ARI. That's our expectation. And
margins of?
Margin, I think it should get to the margin of 35 EBITDA and 25 net. Even though now it's around 13-14%, we expect that to ramp up, especially when we go with our value addition.
And what about the other two acquisitions, sir? You mentioned that revenues for this one. Yeah.
Yeah, but the Vector is a very, very rare company in the sense that they actually make the BLDC motors, they make the engines, they make the counter rotary the propellers. So this company, again, Zen looks not at the turnover, but at the potential and the IP that they have developed. The IP this company has developed is extraordinary. And we think that this is a absolutely win-win position for us in the sense that not only will they be helping Indian drone companies to indigenize, but they'll be also exporting a lot from here to North America and Europe.
Okay, so you've bought it for the IPs. Got it. All right, sir. Coming back to the overall question, the guidance you've already reiterated that you will do 900 crores in FY25, right? And you're saying that revenue from at least ARI, some of these other acquisitions should start trickling in. So what is the top line growth expectation that one can have for FY26 from Zen Tech?
So, I think for FY20, again, we have been saying that there will be a CAGR of 50% over the next 3 years, average CAGR of 50%. So depending on the inflows of the order in Q4 and Q1, we will be able to actually predict what will be the top line for Zen in 26. But we expect even if it is muted, we expect that the 27 and 28 will more than make up the gap in terms of absolute number that we are planning to achieve.
So you're saying 50% CAGR top line, you're still intact with that sort of outlook and guidance?
On an average. Even if this year is a little shortfall, we'll try to cover it in 27.
Okay. Now, on margins, I think you've mentioned that you will be around this 30% handle. Just trying to understand what's happening because you've already done these acquisitions. So, how much cash is left in the books and why did your finance cost go up so much in the third quarter?
So, the finance cost, we had taken, a loan from an NBFC preemptively, but it was a 10% cost. So the cost that has gone up is because of the interest on that, but it was 60 crores because by that time QIP was not done. So in anticipation of delays of QIP, we had raised some money. But this will be repaid by this May, and so we'll not be having any finance costs in that regard.
Okay, all right. Very quickly, sir, what is the pipeline you have bid for orders? Because currently, I think your order book is around 800-900 crores approximately, and you're expecting things to pick up in the first half of next fiscal. So what is the pipeline of the orders you have bid for? Because that will give us some visibility, sir.
I would say, the pipeline, we say whenever the fund allocation happens, etc., we think by the first quarter, almost about 800 crores worth of orders would have been decided.
All right. And these acquisitions that you made for the IPs, does that enable you to bid for more? If you could give us a sense of, by when do you start bidding for projects from these acquisitions that you've made?
So ARI, we will start bidding immediately. I mean, as we speak, we will be going and start talking to the navies, not only India, but all global navies about, the capabilities. And again, we want to be absolutely aiming to be number one in that. And I think the revenues should start in FY26, but I think they'll really accelerate in FY27 and 28.
Okay, all right. Mr. Atluri, thanks a lot for joining in and clarifying on all of those details. For the last 1 month, your shareholders have been clearly nervous. The market has been such as well, but your stock price has come off by close to around half. And even now, it's at around 10,000 crores of market capitalization. So execution of orders, getting more orders, and reporting a good amount of profitability is something that the street will track very closely. Thanks a lot for joining in.